Dear colleagues, good afternoon. We are starting the press conference by the Chairman of the Bank of Russia, Elvira Nabiullina, following the results of the board meeting. And as traditional, we shall start from the statement and then we'll be able to ask your questions. Good afternoon, dear colleagues. Today, the Bank of Russia made a decision to reduce the key rate down to 10% per annum. We note that the annual inflation has slowed down considerably from 7.2% in July to 6.6% in mid-September, which is in line with our baseline forecast. In August, inflation expectations returned to a downward path while households' behavior model remains saving-oriented. Economic indicators show mixed performance, so we still cannot register a transition to sustainable growth. For inflation to continue dragging down to steadily hit the 4% target in late 2017, monetary conditions should remain moderately tight. For that end, we need to keep the key rate at 10%, at least until the beginning of the next year. We will be able to look into its reduction not earlier than quarter 1 or 2 in 2017 at the earliest, as suggested by our estimates based on the updated macroeconomic forecast to be published today in the Monetary Policy Report. I would like to dwell on the factors behind our key rate decision and our outlook for its future path, its expected trajectory for the future. First, inflation drops in line with our forecast. However, this partially results from temporary factors which we should consider in our estimates of its future dynamics. We have revised our inflation forecast for the year-end to 5.56%. Inflation has already slowed down to 6.6%, with weekly data for the beginning of September taking into account. Let me remind you that a year ago we expected annual consumer price growth to stand at about 7% in September 2016. Core and underlying inflation indicators have been down. This year's good crop yield contributes to inflation slowdown, but in our forecasts we consider this factor to be temporary. We also keep in mind that inflation has gone down in the recent months against the global market environment being more favorable and the ruble stronger than our forecast assumed. Having said that, inflation has failed to fall below the expected level. It may point to the fading different effect of long-term factors, primarily consumer demand. This is also evidenced by individual inflation indicators. In particular, non-food price growth still shows a slow decline, and seasonally adjusted monthly inflation is still elevated. We focus on this matter to be really sustainable. Inflation reduction should be backed primarily by long-term factors. These factors include households and businesses' behavior, their expectations of future prices and interest rates, wage dynamics, costs and income. We shape necessary incentives and conditions to reduce inflation and inflation expectations by sticking to a moderately tight monetary policy. Though demand-side impact on inflation is fading somewhat, it remains low and continues to check inflationary pressure. Despite some improvement in income dynamics, because households' propensity to save remains relatively high. Positive real interest rates on deposits play an important role here. As regards incomes, they still show very diverse dynamics. Wage growth varies across industries and social groups. Real disposable income shrank following the decline in non-wage profits. We can see a modest recovery in demand for individual durable goods. Nevertheless, retail turnover remains weak, and we do not expect this trend to reverse in the near future. The second factor we took into account is inflation expectations and expectations regarding the key rate, which largely shape the tightness of the monetary conditions and the terms and conditions. Importantly, households' inflation expectations resumed their downward trend, being at their lowest since autumn 2014. However, speculations about the steadiness of this downward trend are premature. We should wait to see it consolidate. Though declining inflation expectation of businesses and financial communities continue going down, but they still remain above our inflation forecast at the 4% target level. Having said that, we can see market participants predicting a lavish and fast key rate cut. As a result, long-term interest rates fall behind short-term ones. This environment affects monetary conditions and strengthens our concern, and indeed the potential for nominal rate reduction is limited. We expect that the message about keeping the key rate at the level of 10%, at least until the beginning of the next year, will drag down inflation expectations. It will close the gap between short and long-term rates, despite the persistent inversion of the yield curve. As I have recently mentioned, real rates should be positive and underpin the propensity to save, while demand for loans should remain moderate. In this case, neither consumption recovery nor lending growth will outrun the economy's capacities. At the same time, the ruble will still appeal to domestic and foreign investors. As a result, neither demand nor exchange rate will put pressure on inflation. In addition, debt burden in the economy will ease progressively, though remaining elevated in some groups of borrowers. Imbalance prevention is a precondition for the maintenance of financial stability and similarly fundamental for a healthy and high-quality economic recovery. Third, we also recognize that a gradual movement towards a structural liquidity surplus would automatically result in somewhat reduced nominal interest rates. This is, however, a predictable and manageable process of a limited scale. We regularly run repo auctions and as regularly deposit auctions, depending on the current liquidity situations and the state of budget flows. When this happens, money market rates remain close to the key rate. Our capabilities to impact on economic interest rates will be unchanged once we have finally moved to a structural liquidity surplus. This transition is forecast to occur as early as 2017. The Bank of Russia will apply all the appropriate tools to ensure that operational control is in place over the level and the structure of market interest rates. In particular, there are plans beyond auctions to issue Bank of Russia coupon bonds. Starting from today, their specifications are available on our website. Let me emphasize that the application of the so-called liquidity absorption tools is not going to undermine banks' lending capabilities, as we, through our instruments, seek to tie up the liquidity surplus in the system, which, no matter what, resides in accounts with the central bank. The rate we apply here is close to the key rate, which is intended to escape a scenario of downward pressure on rates in the money market and consequently on all other rates in the economy, with the risk of their heightened volatility. On the subject of the current economic state, the recovery has so far been unsteady and heterogeneous across sectors and regions, this being another factor to recognize. Some positive movements continue to be seen in the output structure as related to import substitution and the rise in some non-commodity exports, to name a few. In this way, signs emerge that the output of high-tech products have started to rise. This includes household appliances, machines, and medical equipment. At the same time, there has been some deceleration in growth places of the former drivers, namely chemicals and the food industry. The individual growth points are insufficient to ensure the overall production performs strongly, considering their small contribution to the total output. It takes time for the positive trends to develop and become entrenched. We see the labour market undergoing adjustment to the new environment. Unemployment is still low, suggesting no growth in part-time or concealed unemployment. These facts are primarily driven by demographic restrictions rather than economic improvements, regrettably. Enterprises seek to retain skilled labour as the supply of manpower is low. Although there has been some growth in nominal salaries, estimates suggest that there are no inflationary pressures coming from the labour market. Labour market conditions point inter alia to the fact that the advance of the Russian economy is limited by internal structural factors. These stem from the infrastructural and institutional profile of our economy as much as from the current demographic situation. Their potential impact on future economic growth may be stronger than our expectations. Even now, they find their way into the unstable recovery of economic activity, as well as the signs that disinflationary pressure from demand is declining. As before, we expect quarterly GDP growth rates to enter positive territory as early as this 2016. Yet, in line with the updated baseline forecast, GDP growth rates in 2017 will be low, at less than 1%. As the structural constraints continue to play a role, the rates of economic advance are set to settle down at 1.52% between 2018 and 2019. Our baseline scenario provides for no positive impact from external conditions, as our calculations assume the average annual oil price of $40 a barrel over a 3-year horizon, as well as low rates of global economic growth. As we make a decision on the rate, we always take into account the balance of payments. We expect the current account balance to decrease in the long term, in sync with reduced capital outflows in the environment of floating exchange rate. Between 2016 and 2018, net capital outflows, that is, the difference between capital outflows and its inflows into the country, will remain at a historically low level, no more than $25 billion. Corporate external debt payments will progressively decrease, considering the available refinancing facilities. Growth in the demand of the real sector for foreign assets will be held back by slowly recovering incomes, as well as by the invariably high real interest rates in the Russian economy, which make ruble savings attractive. We look to banks fully repaying their debt on FX refinancing operations before the end of 2017, thereby enabling the foreign currency reserves to grow. Importantly, even the risky oil price scenario, $25 per barrel, this identifies no material threat to the balance of payments. And finally, as far as inflationary risks are concerned, them getting stronger, happily, this is not being observed, but they remain. These risks relate to inflation dropping more slowly than we expect under the influence of one or a set of the following factors. First, the high inertia of inflation expectations specific to Russia, which can be responsible for their inappropriately low movement as is necessary to drag inflation down to 4%. Second, a sharp changeover in the population's behavior model from savings to consumer-oriented can amplify inflationary pressure. Third, the certainty as regards fiscal consolidation, including the indexation of wages and pensions, is yet to come, and this can affect consumer behavior. And finally, the external environment risks cannot be ruled out, considering that oil price fluctuations impact the ruble exchange rate movements, domestic prices, and inflation expectations. It should be stressed once again that the inflation risks are not understood to be the risks of inflation strengthening. Inflation will continue its downward movement. We are fully confident on this point here, as well as market participants are. These risks consist of the rates of inflation getting stuck at around 5-6%, failing to reach the target level needed to enable a more favorable environment for economic growth. We are sure that we will be able to reduce inflation to the target level even in case of the inflation risks materializing. As I say so, I want to emphasize that our target is to reach not a one-off mark, but a steady level inflation. Yes, the task at hand is to deliver on its reduction to 4% in 2017. Yet what we mean is not to have this level registered at a certain point in time, but to ensure that inflation resides sustainably around this mark of 4%. And it is not a magic figure of some kind, yet a new level of price stability, inflation expectations, and credibility in macroeconomic policy. We believe that there is every chance to deliver on this target. Many countries have already made this journey, but it is only through a consistent and sustainable policy that we can deliver such a really sustainable outcome. Living in a high price and income growth environment may seem to be more customary and even attractive. Yet this is a deceptively easy and obviously a non-performing direction. What needs to happen is a change in our conventional ideas on what should be price growth in the economy. No less important is it for business to continue on the path of performance improvement, for the structure of the economy to upgrade, and for competition to advance. All of this would create a strong foundation to enable reduction in inflation and to spur economic growth of a higher grade. Thank you very much for your attention, and here I would like to pause, and I'm ready now to answer your questions. Thank you very much. Dear colleagues, well, let us do now the Q&A session. Don't forget to introduce and identify your company. Olga, your question is first, please. Bloomberg Agency, Olga. If I may, two questions. First, in your statement, you are saying that the Bank of Russia considers it is necessary to maintain the interest rate at 10% before the end of the year, till the end of the year. Does it mean that the reduction of the rate during the subsequent two board meetings, which are supposed to take place before the end of the year, is completely ruled out? And in the same flow is the question: if you forecast inflation by the end of the year 5.56% with the rate at 10, it means that the real rate is in the positive, and the difference is just 4 percentage points, which is above your previous estimations of the way of the extent to which it should be higher. So please, could you comment on the level of the real interest rates? Is it possible to expect additional decline? And I've got another question about the VTB, because the bank made an announcement to issue one-day bonds. Has the bank discussed this with you, or is it just their own initiative? And as far as the reduction of the rate this year is concerned, based on our base forecast, let me put it this way, this is a very unlikely scenario. Well, there is a bit of a likelihood, but only in case there will be very material changes for the better from our base outlook. But in case the base outlook sustains, we don't see this being likely. First thing. Second thing, as far as real interest rates are concerned, a very good question. And indeed, in order to achieve a sustainable level of inflation at 4%, and most importantly, in anchoring the inflation expectation at the level of 4% for the inflation expectations not to change all the time, but remain stable and very close to the level of inflation which we want to achieve, which is 4%, and this is not an easy task. In order to do that for some time, it could be a continuous period of time, even after the 4% target is reached, to hold the rates in a real positive mode, and this is the level that we estimate to be at about 2.53 percentage points. But because the inflation expectations now are much higher, and we ought to go a long way in order to reach the 4% level, this kind of gap may remain for longer. And this gap, or the positive level of the positive balanced rate, will subside gradually from 6 down to 3%, as we were saying. And this is a truly well thought out policy to reduce the inflation expectations. I mean, the high level of the rates and gradual reduction of them down to the level of 2.53%. Now, in as far as VTB is concerned, indeed, this is the project of the VTB itself to issue their bonds. They have the right to do so, but at the same time, we do not see that it might affect the overall level of liquidity in terms of the redistribution of liquidity, maybe in between the money market players and the banks, if, as the result, there will be a more balanced distribution of liquidity from the point of view of our transmissionary mechanism. That would only play a positive outcome. Dear colleagues, please. Gulnar. Gulnara Vahitova from RIA Novosti. I've got the following question. In the beginning of September, Russia and Saudi Arabia agreed to cooperate in the oil market in order to stabilize this market. Has the central bank took this factor into account when making a decision about the key rate based on your expectations? To what extent this decision might affect the financial market and the Russian economy? And my second question, if I may, today we expect the decision to be issued by the Standard & Poor's with respect to the Russia's sovereign rating. What kind of decision do you expect from S&P? As far as the first question is concerned, yes, undoubtedly, when making our decision about the key rate, we assess the way the oil prices, what kind of effect they generate. But the oil prices in their turn are dependent upon so many other factors. We are trying to take into account what is going on in the market, what kind of agreements are being prepared, what are the targets that the various countries and politicians are trying to achieve, what is going on with the drilling fleet and what's going on in the shale production, how long the surplus on the supply side is remaining. We all take it into account, but in order for our policy to be predictable, and for the interest rates to be predictable, we believe that we should rely upon more or less a conservative, realistic, but still conservative outlook for oil prices. Currently, we see that the oil prices are slightly higher than the level that we expect for the 3-year period. But nevertheless, we believe this to be a material factor in order to offer a consistent fiscal policy. At the same time, I shall repeat that we base our outlook on oil prices at $40 per barrel. Well, S&P shall wait and see. Hopefully, they will come out with a positive decision for Russia. Dear colleagues, please, Tatiana Chebasova, Interfax Agency. I've got 2 questions. The first one, the liquidity surplus is related to the rates of the reserve fund being expended. Based on the Minister of Finance estimation, it may run out by 2017. Does the central bank has an expectation in terms of the number of years that the liquidity surplus may remain in the system for 2, 3, or 4 years? And my second question, the central bank today announced its future bond issue. Back in June, you said that before the end of the year, you do not rule out any experimental issues, in case you have any plans when the market should see you come out with these. All right. As far as the liquidity surplus is concerned and the way it may affect the fiscal and credit policy, we maintain continuous working contact with the Ministry of Finance in order to be able to align our expectations with the way the structural liquidity surplus is going to evolve. Again, I shall repeat that we can sustainably switch over to it by 2017, because right now we are sometimes in surplus and sometimes we're in shortage of it. I mean to say that in case this year the spending from the welfare fund would be 3.7 billion rubles if we, at the same time, watching out the way it happens, may do it earlier or do it later. Now, in terms of whether the structural surplus will grow or decrease, it will depend upon the rate of spending from the reserve fund. But even after the spending from the reserve fund are over and we enter into a certain structural liquidity surplus, it may remain like that for a long period of time. It may not grow, but it shall remain. And in order for it to go down, it is necessary for the budget to start accumulating. Now, in terms of the period of time during which it will accumulate the amount of money in order for the structural surplus to rebound, it would also depend upon the budget policy. And we're very much hopeful that such a certainty in the midterm budgetary policy shall come round, and we will be more confident in speaking, amongst other things, about the rates at and pace at which this structural surplus will develop and how long it will remain. This was the first question. Now, the second question about the bonds. Yes, indeed, we made a decision about the basic specifications of this issue. We are operationally ready to launch, to issue them, and possibly certain test issues may come, although there is no need for it because we're able to cope through the deposit auctions quite well. The marketplace or the credit institutions will be able to buy these from us, and in their turn will be able to enter into repo operations between each other. But in order to do repo operations with the central banks, you would need to have certain specific amendments into the legislations, which is something that we are preparing right now. Other questions, please, Maria? Russia 24, Maria Kudryavtseva, Elvira Nabiullina, to carry on the liquidity surplus in the banking sector, how one can incentivize the banks to invest these money into the manufacturing sector, to offer loans with affordable, convenient rates. Well, I mean, I would say that this is the most important and the most complex question in terms of how one can incentivize banks to issue loans which are related to new investments, to upgrading of production and project finance, because we do observe that there is a structural surplus of liquidity, but the banks prefer to remain within a more conservative policy, understanding that there are certain deposits that still have to be serviced and not go out into the securities market. Last month we noted a slightly higher activity in consumer financing rather than in corporate financing. And this is the question of the extent to which the manufacturing sector in the economy is ready to produce the kind of projects which are going to pay back, because they have to be not only be able to pay back, but also to be quite reliable, because loans is one side of it, the banking industry, and deposits is the other, because the banking industry should enjoy the kind of returns which enable it to service their liabilities in terms of deposits. So these deposits have to be, and these projects have to be reliable and be able to generate revenue. So the more of this, the more the banks would be willing to offer loans to such industries and sectors. But nevertheless, this kind of activity is taking place differently in different sectors. But we do also note various niches and the points of growth which banks are quite actively using. And so if we talk about the consumer financing, such as mortgage area as well, we can see how actively such sectors also are being lended, such as food industry, chemistry, and natural resource production. So there are projects like that in different industries, and so the structural reorganization would mean more projects of such sort to come. Elena, please. Elena Fabrichna, Reuters. In your today's press release, the Bank of Russia very specifically stated about what it is going to do in the future about the key rate. What exactly has driven you towards that to be so precise in describing your future action? I believe that this is the first time in the history of the central bank. And my second question, has your decision been in any way affected by the likelihood of the Federal Reserve key rate being risen? Do you expect it in September or December? Well, about the future trajectory, yes, indeed. This is the first time when we come out with a more precise understanding of what we're going to do within the next few months. Now, why did we do that? Firstly, we see the market expectations, and I guess this is everybody's expectations for the key rate to go down. And the market expectation, in terms of the way the key rate is going to go down, is somewhat running apart from ours. But at the same time, the marketplace expectations demonstrate that not everyone believes that the 4% inflation is something that we will see towards the end of next year. I mean, we shall reduce the rates, but we won't be able to achieve the inflation target. And amongst other things, we wanted to inform the public once again that we intend to achieve the 4% target per annum. And that is why the path that we're going to go in terms of this reduction specifically suits this target to reduce the inflation down to 4%. We both see certain inflationary risks that I've mentioned, which require a more deterred and cautious inflation reduction, and that is why we wanted our activities to be more predictable by the marketplace. That was the first thing. The second one about the Fed, we took into account different Federal Reserve policy scenarios. As a minimum, we expect that at least one time this rate is going to be risen, maybe twice it will happen. We don't rule this out. In any case, if the financial market respond to this respectively, we took it into our expectations and our rate decisions. Colleagues, please. Margarita. Thank you. TAS agency. Could you please tell us, this year, certain privatization deals are going to be postponed, and consequently the budget will fall short of revenue. Did you take this into account in your decision? Secondly, you mentioned that the central bank is very much concerned with the way the analysts are so fast in expecting the key rate to fall down and the inflation to go down. So what one should do about it? As far as the privatization deals are concerned, postponing them won't directly affect what we do, because what's important for us is the overall level of the budget and the deficit, because we act upon the assumption that the one that is planned is not going to be changed, and then the government will decide what it should do in order to fund this deficit, because they've got three sources: privatization, borrowing, and spending the reserve fund. And we're maintaining a constant contact in order to understand what sources they resort to, so as to respectively develop our policy in terms of the liquidity absorption and achieve our targets, so that the rates in the economy could be close to our key rate. So we do not see any big problems here from the point of view of our fiscal policy and the efficiency of the mechanisms that we employ. As far as the risks of a more optimistic expectation in the key reduction are concerned, let me explain once again where we see a certain problem. There is an expectation of a faster rate decline without being able to achieve the inflation. So once again, we're signaling that we're going to do our best to achieve the target and to reduce the rate in such a way so as to achieve the target. Colleagues, please. Anna. Elvira Sahibzadovna, Anna Kalina from Izvestia newspaper. I also have two questions, if I may. First of all, many analysts, not many, but at least the prevalent minority, are specifying the kind of risks which are there which would prevent the central bank to reduce the rate. So I wanted to find out, has the board of directors voiced their unanimous approval of it? But if not, what kind of risks were being voiced? What kind of arguments were being resorted to if somebody on the board was of a different view? We also stated that there's a risk of not being able to achieve the 4% next year because the incentives for the households in terms of saving could be weakened. Is it a purely hypothetical concern, or do you see any visible trends? What could be conducive to such a weakening? Only the reduction of the real incomes or anything else? Thank you. Thank you very much. As in the case of any decision by the board, we go through quite a discussion and various experts meet preliminarily before the board, and the board today was unanimous in its voting. But it is true that there have been very extended professional discussions engaging experts because there are reasons to reduce the rates. There are certain risks which we were trying to take into account, and we did our best to reflect on those in both the press release and our statement. We do see the risks, but we believe that when running a moderate fiscal policy with an accurate and diligent reduction, we would be able to achieve our inflation target. As far as the savings and the saving behavioral model is concerned, indeed, the current household behavior shows propensity to save, which does produce a very material disinflationary effect. But at the same time, we are aware that this model, when affected by different factors, may change, and we also should make a note of it. And these factors are related not only to the income growth, because with the income growth it may happen, but also with the level of interest rates. As far as bank deposits are concerned, because we do see that this is one of the factors when households trying to make up their mind whether to save or spend money now, with an overall psychological expectation from what the overall economic development may show, whether wages could start demonstrating growth or the level of unemployment is going to remain low. So whenever people have greater confidence, it means that they start saving less, because when the crises break out, people start saving. So the household behavior is being affected by many factors. It is not really possible to do a precise mathematical estimation, so we got to be very scrutinous in our monitoring, and the consumption will continue gearing up. And this is normal as the economy rebounds. The most important thing is not for the financial bubbles to accumulate, both in the consumer spending. So far, it is not happening. So far, the dynamics remains on the savings side of things. But further on, we shall see, and we shall monitor and respond if necessary. Dear colleagues, please, anybody else hasn't asked a question? Just Igor? Igor Zubkov, the Russian Gazette. And what do you think about the banks ridding their assets and liability from the currency component? Can you strengthen that? Can you weaken that? And do you allow in some immediate future for the currency deposits to be offered with zero return on them? Well, ridding the deposits from the currency component, it is premature to say anything, because these measures have been in place not so long ago, and we were making our decisions in a certain environment. Some of the measures are showing effectiveness, including currency-denominated loans to consumers, particularly mortgage. Currency mortgages almost at zero. Prudential measures produced the effect. As far as differentiated for us, and as far as the ruble liabilities and currency liabilities are concerned, we still need to assess things, but we see that the dollarization is not growing, which means that the deterring factor is being effective. We may undertake certain new measures as we see things happening. So, as I said, we're continuously monitoring the environment in order to be able to adjust our policy accordingly if necessary. As far as currency deposits are concerned, indeed, the rates are somewhat going down, but so far in the immediate future, I do not see that they're going to reach zero interest rate for the foreseeable future. I don't see this. Colleagues, please. Irina. Good afternoon, RIA Novosti Agency. I wanted to ask the following question. Many analysts expect that the end of this autumn may be accompanied by a very strong ruble depreciation, because there is even an opinion that the government is trying to hold the exchange rate in a stable way before the Russian parliamentary elections. What are the ECB expectations? Will this indeed something that may happen? Well, this kind of soothsaying is what we hear in different months of the year. There are no grounds for such expectations to come true, none whatsoever. We even do not see a slightest risk of the volatility becoming stronger. Without doubt, the exchange rate does depend upon the oil price and the way the oil price behaves, but you also can see that the oil price recently has been floating around, but it was more or less stable, and the ruble exchange rate is even less volatile than the oil price volatility. We hope that that shall remain the case. And as far as the stable level of currencies, because of the market conditions, we're not intervening into the operations of the FX markets. This ruble is indeed a floating one, and it really reflects the market environment and shows relative stability. Colleagues, please. Tatiana? As far as I could see from the press release, that you brought down your GDP dynamics for 2017, whereas in the past you stated that is going to be the range of 1.1, 1.4. It is less than 1% now. Could you please explain where does it come from? And how the central bank reviewed the macroeconomic parameters in the risk scenario against the oil price being at $25 per barrel. We indeed have updated our outlook as we usually do during the board meetings once a quarter. We revisit our outlook, and in our report on the fiscal policy, we publish these expectations, and you will be able to see the details once it's being published to the website. But this upgrading and updating doesn't have any radical nature. This is just additional specifications into it. As far as the base scenario is concerned, which is the most important to us, our expectation as to the GDP growth this year, we capped it the way we had it in June, minus 0.3, 0.7. Our estimates for 2017 were brought down somewhat, indeed. Guided by the revaluation of the economic growth factors or the economic dynamics, so to say, being aware that those are of more structural nature. So more structural restrictions. The structural factor is much more significant than the cyclical one that we've analyzed, and so we changed this correlation. But this only applies to the 2017 dynamics, whereas 2018 and 2019 are concerned. Our outlook remains the same, 1.52% is the rate of growth. Oh, yes, and the risk scenario, minimum one in terms of upgrading, just minimum changes. Colleagues, please. Lydia. Good afternoon, Lydia Coley from Reuters. What kind of real effect you may expect because of your today's reduction of the key rate? I mean, the effect on the economics and the economic recovery. Because on the one hand, you reduced the rate, but on the other hand, you said that you will form the liquidity, but it doesn't work simultaneously in order to recover the lending activity. Well, could you please explain what doesn't work simultaneously? I mean, simultaneously, you stated that you will hold the bond auctions by the Central Bank of Russia, which won't help the lending activity to rebound. I mean, from the reduction of the rate, we expect, in the first place, that on the one hand, we shall attain the inflation rates which we promise, meaning to say that this decision was made not to undermine our inflationary targets, because what we act upon is that the current within the range specified would allow us to achieve our inflation target. On the other hand, it is quite possible for the lending activity to somehow grow because we are watching the way the affordability of loans is growing. Now, absorbing liquidity, we're trying to perform totally different functions. So there's two functions, reduction of the rate and the ability to they do correlate with each other. There is no discrepancy between them. By absorbing the liquidity which flows out, and not always in an even way through the budgetary channels, we're trying to achieve one way, so that the money market rates could be holding close to our key rate. In this way, we control and manage the rates in the economy. If we were not to absorb then they would cease to be manageable, and they would fall much faster, and that would undermine our inflation targeting. So we're managing it through our key rate, and these operations are intended for the money market rates to hold close to our key rate. Colleagues, please. Olga? Well, if I may, could I ask about the liquidity surplus? When do you expect it to reach the kind of level so that the Central Bank of Russia would only need to issue bonds? So in other words, when the first issue is going to take place and what kind of liquidity surplus level should be by then? While this is not about the volumes of the liquidity surplus rather than the stability nature, because the deposit auctions are shorter term in their nature, while the bonds are something that we intend to issue, for 3, 4, 6, and 12 months maturity. So this is a longer term linking and an attempt to prop up liquidity, and we will switch to longer-term operations once we see that the liquidity profile is more stable. And that would also depend upon the way the budget system spends money, because currently we're either in deficit, either in surplus, or in shortage, rather in a shortage with a few days of exception. And if the budget currently continues its spending rate as is expected, 2.7 trillion this year, we will end up in a situation of a structural surplus by the beginning of next year. But nobody will be able to quote you a specific date right now. In the very beginning of next year, we may happen to be in this situation. Colleagues, please. Yes, if I may, further responding to this question, principally speaking, the deposit auctions make it possible to absorb this kind of liquidity at any scale, and we do this for the convenience of long-term securities, and that is why the deposit auctions is a very well operating instrument. Andrei, please. Andrei Ostrovich, Wall Street Journal. I got two questions. One, can I ask you to be more specific about the capital outflow? You stated that it won't exceed 25 billion a year. Do I understand correctly that it means that the sanctions are not going to be suspended in your expectations that the banks and companies won't be able to borrow from the international capital markets? And my second question is about the rates. Now that you are being so specific, telling us about your plans as to when and by what extent you will reduce the rates, does it mean that if the inflation is 4% by the end of next year, that your key rate by to be 2.53% higher, 6.57? Thank you. While as to the capital outflow, indeed, we forecast that the capital outflow will remain within $25 billion. This year, we even expect it to be lower, and we make conclusions from the current dynamics. And yes, indeed, in our outlook, we do expect that the sanctions shall remain for the period of all 3 years. But nevertheless, despite sanctions remaining, we believe that the payment balance problems is something that and there won't be any pressure neither upon the ruble exchange rate nor the inflation in a respective way, because both the payment balance has adjusted itself both to the sanctions and to the oil price, low oil price environment. This is first thing. Second is about the rates. We believe that once the 4% inflation target is reached, there may be a balanced, a positive and real rates correlation is concerned, 2.5 and 3%. But in order to achieve the 4% and somewhat after it, this positive level could be slightly higher, because it depends upon how quickly the inflation expectations subside and how stable they are. Because even if the inflation is 4%, while the inflationary expectations are elevated there above the level which corresponds to 4%, we may have to hold this level slightly higher, the positive rates. Take all of these factors into account. There is no automatic formula in place, 4 plus 2.5 plus 3. No, it depends upon the processes taking place by then, both in the economy and what kind of inflationary expectations are, what the inflation risks are. So this is an expected average level for the period after we reach 4%. Colleagues, Gulia, please. The Bank of Russia always points to Russia having to work out the system of the budget system in the midterm outlook. Otherwise, it could bring about risks for the Russian economy and the fiscal policy. Based on your estimation, what is the budget deficit is acceptable to the central bank, and can it be allowed to go up in 2017? Well, we understand quite well that for the budget and for the budget policy, there is a need for some take place in order to adjust oneself to the changing external environment. When the oil revenues fall so dramatically down, it is obvious that we should wait some time. So to reduce the budget deficit very quickly, it would be impossible. It would be a smart thing to do. And it is not really the budget deficit that but then an understanding of a midterm strategy which shall point toward the trajectory along which the budget deficit will go down, how it will be funded, and what is the way we shall leave with this budget. So the kind of dynamics that the Minister of Finance is currently demonstrating, 3.2.1, is absolutely acceptable and doesn't generate any risks for the macroeconomic stability, which enables the budget to get adjusted and to get adjusted to the new environment while preserving the macroeconomic stability. Colleagues, please. Elena. Well, additional question. You described the deposit auctions as effective tool, and you already launched your process for preparing yourself for the bond issue. Do I understand that with the central bank no longer increases the monetary reserves? Well, we are not abandoning anything. We retain the whole set of instruments, but we made these decisions, and it will be made effective in September, and we shall see results in October. We first need to see what those are, but it doesn't mean that we will make a decision about our next step, or we won't, because we need to see the results of our first step. Colleagues, please. I've got the following question. If the Minister of Finance and the government are going to be consistent and will bring about the rules debated for the fourth quarter and won't allow, the money not spent in December to be spent later on, how that may affect the inflation of next year, and in this case, could it be lower than 4%? No, that won't affect the inflation in no way. It may affect our activities in either absorbing or not absorbing excessive liquidity. We're going to absorb it on the scale so as to maintain the kind of rates that will allow us to reach the inflation. So that won't affect our inflation. It will affect the central bank operations in terms of how much of the liquidity we should take out of the market or not. Colleagues, please. Irina. Recently, the Maxim Oreshkin, the Deputy Minister of Finance, said that there are serious prerequisites for a very tough contraction of the Chinese economy as well as other challenges faced by the global economy, and so he did not rule out onset of such a stress scenario related to the oil prices at $30 per barrel for the next few years to come. Does the central bank show eagerness to accept this particular expectation? Well, of course, the external risk factors do exist, but in our base scenario, we act on an assumption that the economy will demonstrate the slowdown, but in a very predictable way, exactly as is being planned by the Chinese authorities. And the Chinese economy will gradually switch over to a different development model. In the very same token, as far as the external challenges are concerned, we're watching them. There can be a more negative scenario in terms of our risk scenario. We paste it and try to align it with the $25 per barrel, but at the same time, we believe it is very unlikely, such a risk scenario. Dear colleagues, well, I guess that we would gradually wrap up. But will there be any more questions? Chana? Our last question, please. Yes, my question is this. Recently, in Sochi, when you were speaking, you touched upon the unsecuritized lending, which may bring about inflationary risk. Could you give us more details in terms of what kind of rates and of these processes you expect, and what do you believe should be the pace of lending activity growth so as not to affect negatively inflation? Well, yes, indeed, the overly fast lending in consumer area could bring about certain risks, like the over-lending on the part of the consumers could be growing. We have been able to avoid this kind of scenario, which started manifesting itself in 2013, 2014, undertaking certain macroprudential measures. We won't allow for such a scenario because we've got this instrumentality, which is macroprudential activities with differentiated in terms of the risk-weighted measures as far as the consumer lending ability to affect inflation. It is true that as far as the bank's lending portfolio growth is concerned, it is very much dependent upon how much it may affect the demand or in terms of the supply of products, which may not lead to such growth. And so faster consumer lending growth may bring about the kind of risks that we are supposed to take into account. In the meantime, in terms of outwardly existing risks like that, don't see it, but this is a sector that does deserve scrutinous attention in order to avoid such risks, and we do it. So we believe that the consumer lending should demonstrate the growth which is close to the household's income growth, because we mentioned it already in terms of the structure of the income growth, so as to avoid any bubbles and to be adequate, not above the income growth pace. Yes, please. Yes, please. Yes, the very last question. I got a question about the key rate dynamics for the next year. First of all, the Central Bank made a decision that the steps it undertakes should not be less than 0.5. But can the central bank make a decision to reduce the rate by 0.25? And next year, do you expect a slower dynamics in the reduction of the key rate? I mean, throughout the course of the whole year. I understand. Thank you. Yes, indeed. We recently have been acting with the leg of 0.5, but because the level of the rate itself was quite high, I mean, it was rate, I believe that it is possible to resort back to 0.25 when the rate is practically remains at this level, because with the next reduction it is not going to be a double-digit reduction, and so you will definitely be able to allow for 0.25. We are not ruling this out because this will be in line with the weight of this change compared to the level of the rate itself. As far as the trajectory for the rate reduction is concerned, it will depend upon how the economic and inflationary processes evolve next year. We will focus upon everything, and again our key task is to achieve the inflationary reduction in compliance with our plans, and we will work on the trajectory of the key rate reduction in line with this. Thank you everyone for your attention. Dear colleagues, thank you for your interesting questions.